Jackson CPA here with another video for you regarding the American Rescue Plan Act. So today's video is about that act, the law that was recently passed that really has a huge impact on a lot of individual tax provisions come 2021 tax year. And so we wanted to just cover those for you real quick so that you understand exactly what's in the bill and what might impact you as a taxpayer. So stay tuned and don't forget to subscribe or like the video. If you have any questions, feel free to comment and we'll try to get back to you as well, okay? So let's hop right on in. So the American Rescue Plan Act was signed on March 11th, 2021 by the President, and it became law. Okay, what this bill does is it primarily affects individuals, and those individuals got some additional funding, like in stimulus, in terms of unemployment benefits, etc. Okay, so let's kind of talk through each of those items. So the first item that we want to touch on is stimulus payments. That's what a lot of people are really concerned about. That's what they really like. And so we wanted to kind of touch on those. Each taxpayer basically gets $1,400 of stimulus, okay? There's certain eligibility criteria that goes into that, but if you qualify, you should get $1,400 in a stimulus payment. And then for each dependent that's on your tax return, that'd be $1,400 for each dependent as well. Okay, if you're married, you'll get two $1,400 credits. If you're single or married filing separate, you'll get one $1,400 credit. Now there are still income thresholds like there were previously, and again, just like there were previously, these are advanced credits for your 2021 tax return. So if for some reason you don't receive the credit, by the time you get through this 2021 tax year, you should be able to get it come filing your 2021 tax return if your income is at a certain level and still below the thresholds, okay? So don't be too terribly concerned if you don't get it right up front, but hopefully everybody does get their advanced credit if they're eligible to receive it, okay? So let's kind of go through a few of the rules in relation to it. So one of the changes they made compared to the first two stimulus payments that came out is that you do not, your children that are dependents that are over the age of 17 or older, okay, that normally don't qualify for the child tax credit. So basically they said, okay, we're going to actually give you the credit, the stimulus payment for each of those children and other dependents now. So that includes children that are in college, it includes other qualifying relatives, etc. Okay, so that's a nice little perk that's in there, that you'll be able to get the $1,400 for those that you claim as dependents. On the first two payments that came out in 2020, if there was a dependent on a tax return, they didn't actually qualify for the stimulus payment. And so for some reason, they did it that way. But hopefully this resolves that and you should get the full amount for each dependent on your tax return for this one. To get the full payments, your AGI, adjusted gross income, has to be below $75,000 if you were single or married filing separately, okay? $112,500 if you're head of household, and $150,000 if you're married filing joint, okay? The stimulus payment phases out once your AGI hits $80,000 for single or married filing separate, and $120,000 for head of household, and $160,000 for married filing joint. So as you can see, it phases out a lot faster than the first two payments phased out. This was a big contention item that was going around in Congress. They didn't want to give so much money away, so they ended up going ahead and settling on those phase-out ranges, okay? So basically, most taxpayers are still going to qualify, but they're essentially trying not to give too much money away to those that probably don't need it per se. So that's kind of why they changed the phase-out thresholds. The IRS is going to use your 2019 tax return to determine your eligible advance amount, okay? Your stimulus payment amount, unless you have already filed your 2020 return, in which case they will use that return, okay? Now, please keep in mind that the IRS is still processing 2019 tax returns. So if you have already filed your return and you haven't gotten your payment yet, and you haven't filed your 2020 return yet, they won't send it until they process your return, okay? Even though you filed it, they have to process your return before it's in the system and before they'll use that to claim the credit for the stimulus payments, okay? So it takes normally anywhere from 3 weeks to 6 weeks to get the returns processed. There are returns that still haven't been processed. I have clients who filed back in June and July of last year who still have not had their returns processed. So hopefully they will get these all caught up and fixed, because there's a lot of people who are missing out on these benefits right now because they're behind on filing returns. So, but keep that in mind. What you can do is go to the IRS Tax Transcript, Employee Tax Transcript, and see if your return is showing up in there. That will give you an indication of whether they have processed your return or not, and whether you can kind of expect to receive the stimulus payment. Okay? So, now unlike the other two credits, they're going to do it in two tranches. So they're doing it now for those that have already filed 2019 in the system, or if you filed 2020 and it's in the system, they're going to use that one. Okay? But then they're going to check again a couple months down the line after the tax deadline has passed, and they're going to see if they had used 2020 tax return instead of 2019, would it have given you more of a rebate or an advance rebate, okay, a stimulus payment, however you want to call it. So if it would have given you more, they're going to send you more, okay? So it's going to be in two tranches this time. And so the deadline for them to do that is September 1st. So sometime between now and September 1st, if you got an initial amount that was lower than it should have been, when you file your 2020 return and they go and do that, assess it again, you should get the extra amount. Okay, so that's a pretty sweet little extra perk that they gave on this version. Whereas the previous one, whenever they processed it, that was what you were stuck with until you filed your 2020 tax return. Okay. So similar to the two payments that came out in 2020, it is an advance payment. I just want to re-clarify that again. So if you don't get it, you will get it on your 2021 tax return. So please, kind of be patient with your tax preparers. We're all slammed right now trying to get all these things done. And so we understand that some of you might get less money for not having it done, but tax preparers across the country are slammed right now trying to get all this stuff done for you guys. So please bear with us. There are some strategies in relation to the stimulus payments that you should consider, okay? Before you just go ahead and file your 2020 tax return, you should really consider some certain strategies, okay? So there's cases where if you have a situation where you split, like let's say you claim a child in odd years and your ex claims a child in even years or something like that. There's situations where you might want to wait to file your 2020 return to ensure that you're going to get some additional benefits ahead of time, okay? So there's also situations where if your income either went up a lot or went down a lot, where you might either want to rush to file your 2020 return or wait to file your 2020 return. So what I would recommend is you really kind of talk to whoever does your taxes. Hopefully they've kind of read up and understand what's in this bill and kind of the strategies that you should put into place. If not, I would recommend talking to someone who has and kind of getting their opinion on it, okay? Because if you file your return and you could have gotten more money, I've already had at least a couple of clients that did this because they always want to file as soon as possible. They don't ever want to wait, and they could have actually gotten more money ahead of time if they had just waited, until this bill had passed. Okay, so because now we know kind of what all the strategies are that we can put into place, and it would have been made more sense for them to just wait. So just keep that in mind. If you haven't filed your return yet, definitely talk to your preparer and just kind of touch through the strategies and make sure it makes sense for you to go ahead and do that. Okay. Unemployment benefits. Okay, so that's it on the stimulus payments. Let's talk about unemployment benefits. So the first $10,200, as I'm sure you guys have probably heard by now, of the unemployment benefits that you would have received in 2020 are considered to be non-taxable at the federal level. Okay. Now at the state level, it depends on what your state ends up doing. It may or may not be taxable at the state level. All right. So you have to just kind of figure out what your state does. Some states conform automatically to the federal law, and some states have to take legislative action, and some states don't conform at all. So just kind of think about that. Now, for the unemployment benefits of $10,200 being tax-free at the federal level, that phases out basically at $150,000. It's a cliff, okay? There's no phase out, excuse me. Let me just clarify my language. It's a cliff, all right? So if you make $150,000 in $1, all right, then you don't get the first $10,200 of unemployment as a tax-free benefit. So just kind of keep that in mind. You want to make sure that you qualify or not. You may want to see if there's anything you could potentially do there. That's really it in terms of unemployment benefits. The next thing we want to talk about are the child tax credits. Okay, so for 2021, even if the child is 17 in 2021, you'll get the child tax credit. Okay, normally when the year the child turns 17, you stop getting the child tax credit. That's how the tax returns usually work. A lot of people don't necessarily know that, but if you did know that, that's what's going on there. So what they did is they said for 2021 only, we'll go ahead and allow you to take the child tax credit even if the child is 17 in that year. Okay. Additionally, for 2021, the tax credit is fully refundable. All right, whereas normally only $1,400 of the child tax credit is refundable per child. When you don't have enough tax liability to cover the full credit, essentially that's what that means. So let's say your tax liability before any credits is $1,000, but your child tax credit is $2,000. Normally, all right, you'd be limited on how much you'd be able to take as a refundable credit. All right, so that's kind of the nuts and bolts of it. So just kind of keep that in mind as you're going through and doing tax planning and things of that nature. You may get some more money back come 2021. Now, additional things that they change. The amount of the child tax credit is going to be increased to $3,000 per child. If the child is 6 or older, it'd be $3,000. Okay. If the child is under 6 years old, for tax year 2021 only, again, this is all tax year 2021. If the child is under 6 years old, the credit is increased to $3,600. Okay. The increased credit from the usual $2,000 that begins to phase out. Okay. So the normal tax credit is $2,000 per child. It's increased to basically $3,000 per child for any child that's 6 or older, and it's $3,600 for any child that's under 6 years old. Okay. Now the child tax credits, the increased amount that we just talked about, begins to phase out when you have income over $150,000 for married filing joint, $112,500 for head of household, and $75,000 for single and married filing separate taxpayers. Okay, so it starts to phase out. The IRS is required to estimate your eligible tax credit that you will receive when you file your 2020 tax return, and they will pay you the credit in advance at a rate of 1/12 the estimated amount between July 2021 and December 2021. Okay, so in essence, you should be receiving half of the credit you would be eligible for when you file your 2021 tax return. In advance during tax year 2021. Okay, so the IRS is required to set up an online portal to allow taxpayers to opt out of the advance payments or provide information to correct the amount they should receive. Now, the reason why they have to put this portal into place is because this is different than the stimulus payments. The stimulus payments, if you receive more than you should have, you get to keep it. You don't have to repay it back. The child tax credit, if you receive more than you should have when you go to file your 2021 return, you will have to pay that back. Okay, so if you don't think you're going to be eligible for the child tax credit come 2021, for whatever reason, you definitely want to make sure you pay attention when they release this portal and go onto it and opt out of receiving the advance payments. That said, if you don't opt out and you wanted to receive the advance payments anyways, just don't be surprised come 2021 when you owe additional amounts on your taxes. Okay, so just kind of keep that in mind. Talk to your professional. Make sure that they understand kind of what's going on, and they can give you the best advice on whether you should opt out or not. Okay. That's very important when you're claiming dependents and doing the year switching thing, like you have an X where you do odd years and even years again. So again, there's a lot of strategies and things you want to put in place for this one. So just kind of talk to a professional, make sure you're doing everything correctly. Earned income tax credit. For 2021, the minimum age is decreased to 19, okay, for the earned income tax credit, with the exception of students and qualified foster youth and homeless youth, okay? The maximum age that normally is there is eliminated for the earned income tax credit. you can use your 2019 income to qualify instead of 2021 income if it would result in you getting more credit, just like they let you do for 2020. So for both 2020 and 2021 now, you can use your 2019 income to qualify for the earned income credit if it gives you a better result than using 2021 or 2021 or 2020 income, excuse me. Okay. There were some other changes to the earned income tax credit as well that we're not going to cover here. So, and again, that's not something that you really need to worry about until you go to file your 2020 return anyways. And by that time, we'll have all the rules and everything that might affect you for that. Okay. But just something to look forward to if you normally don't qualify because you kind of don't meet one of those criteria. For the child and dependent care credits for 2021, only again. So a lot of these provisions you're going to notice are only for tax year 2021. They did not really do much to change future tax years at this point. So, but for 2021, for the child and dependent care credit, okay, you can get up to 50% of your eligible expenses, up to a max of $4,000 for one child or $8,000 for two or more children. The credit begins to phase out at $125,000. Okay. For business owners, so that's pretty much it for the individual side. For business owners, we wanted to kind of touch on that real quick. The FFCRA credits are extended through 9/30 of 2021, and the maximum amount that they can receive for paid family leave is now $12,000 instead of $10,000 that it previously was. This is also, in addition, starting April 1st of 2021, the credit resets. So if you start to have people that get coronavirus or get affected by it starting April 1st, 2021, and they already used everything, all their eligible days during tax year 2020 or the first quarter of 2021, then you can basically go through and give them an additional 10 days of paid family leave, of paid sick leave, excuse me, and an additional days of paid family leave if they're eligible. Okay, so that's another nice benefit. That's super huge. So you can kind of pay your employees to be safe or do whatever you need to do. Okay. The Employee Retention Credit Program was extended through December 31st of 2021 as well. So now you get until the end of the year basically to claim the Employee Retention Tax Credit, which is pretty huge. That's a nice, super huge benefit for any businesses that are still shut down, or you had a huge reduction in gross receipts. So that's a pretty big program. So I have other videos that talk about both of these, the FFCRA and the Employee Retention Tax Credit. So I'm not going to get into the details on this one, but go listen to those other videos, and it goes through all the rules for you. Okay. Although not in the American Rescue Plan Act, it appears that Congress will also extend the PPP through June 30th of 2021, with the last date that you can apply being May 31st of 2021. Okay. So it looks like that's going to happen. The bill's already passed the House of Representatives. We're just waiting for the Senate to take it up. And assuming that the Senate passes it, we're expecting the President to sign it. So chances are the PPP program will change. This is primarily happening, I think, because of last-minute changes that the Biden administration made to the program for sole proprietors. And it really kind of hurt a lot of sole proprietors in a sense because they weren't eligible to get any retroactive amounts from the program. And so that's another portion of legislation that's coming that the Congress is currently working on, where we believe the Biden administration will essentially have to retroactively go back and figure out how to get more money into the hands of these sole proprietors who should have received more money if they used gross income instead of net profit. So not sure exactly how that's going to work yet, but it is something that's working its way through. So stay tuned in regards to that. The tax deadline for individuals was recently extended to May 17th, 2021. As of now, you still have to make any estimated tax payments, and corporations and nonprofits and others still have to file their tax returns by the original due dates. So this extension only applies to individuals. I just want to be clear. Only for individuals, the tax deadline was extended to May 17th of 2021, which includes any payments that are due on May 17th of 2021. Okay? Your estimated tax payments also for 4/15/20 for the first quarter are still due by 4/15/20 at this time. There's going to be some more pressure from Congress and others for the IRS to do more in regards to this. This is probably the least amount of stuff they could have done. So we'll see. I mean, it may get pushed back even further, but for now, that's what where we're at. Just like last year, be sure to check your state to see what they're doing. Just because the federal government extended their deadline does not mean that the state extended their deadline. So just check with them before you plan on filing a little bit later. We're still awaiting many additional rules and updates to this, so please stay tuned. You know, there's a lot of moving parts, a lot of things going on. This is creating a lot of headaches, a lot of frustration. I understand you need help, you need money, etc. But ultimately, kind of be patient with this as tax preparers. We're working through it. We're trying to get to you as soon as we can. We are still working hard, trying to get everything done. But stay tuned to the YouTube channel, subscribe, like us, comment, etc. We'll try to get back to you as soon as we can. And hopefully everybody enjoyed the video, and we'll talk to you later.